Hi there, it's me Vladimir Gortsev. Today I will talk about the most accurate trading strategy from my point of view and experience. This strategy is designed to make money during the release of important economic news. Personally, as well as many traders from different countries, I have been using this trading system since 2017. On my own and during online broadcasts, I have already traded hundreds of economic news. The effectiveness of this trading strategy is truly impressive. In this video, I will fully describe all the rules of the trading strategy, as well as demonstrate its application to practice. We will start with the theory, and the first thing we will talk about is impulse trading. Traders noticed long ago that sharp price impulses often appear on price charts, and which may look like this. For example, if we look at the candlestick chart, then the impulse will consist of one or more candles with bodies longer than all other candles. How does this impulse appear? Where does it come from? It's all about a sharp change in the balance between supply and demand. Let me remind you that the market price changes precisely because orders to buy or sell at the same price, as a rule, are not the same. If now there are more buyers than sellers, then the price will rise, because there are more people who want to buy an asset than those who want to sell it. In case there are more sellers, on the contrary, the price of the asset will decrease. An upward price movement appears on the chart when there are considerably more buyers than sellers, and investors who decide to buy an asset are ready to buy it not only at the current market price, but also at higher prices. There are no longer sellers willing to get rid of the asset at the current price, so the market price of the asset hikes. Offers of sellers at a new, higher price also cannot satisfy the demand of buyers, so the market value of the asset immediately shoots up, and so on. An uptrend occurs when there is an acute shortage of sellers and a large number of buyers, and a downward impulse appears when so many traders want to sell an asset at the current price or even lower, and there are not enough buyers. Instead of the impulse itself, we will focus on its consequences. The thing is, an important role in the impulse formation is performed by the high speed of price movement due to the strong dominance of buyers over sellers or vice versa. Due to the fast price hike, many traders who have seen a sharp surge in the value of an asset are afraid to fail to benefit from it and disregard a thorough analysis of the situation. They also join in the buying, boosting the price higher and higher. The rapid growth in the value of the asset turns inadequate, but bidders will catch on to it a bit later. We will soon go back to this relevant question. What causes price impulses in the market? Firstly, a large investor or several investors at once can join the auction with a huge order to buy or sell. Their demand is so high that they are ready to purchase an asset from anyone who sells at the current and higher price. Let's imagine that there is an asset that has been trading for the last few hours in the range of $100 to $105 per unit. Both sellers and buyers are satisfied with the current prices, taking into account the circumstances. We can say that $100 to $105 per unit is an adequate, equilibrium price. Unexpectedly for all participants, a very large investor joins the auction, and who, by all means, wants to buy 100,000 units. At $100 per unit, only 55 items are now for sale. At $101, 115 units are available for purchase. At $103, 300 units are up for sale, and so on. If the investor is not very concerned about the cost at which he will acquire the asset, for example, because it is a long-term purchase, then he simply sends a request to buy 100,000 units at an open price. To satisfy such a great demand, in just a couple of minutes, the market will sell to the investor all the goods that are available for purchase from $100 to, for example, $130. Now the market price of the asset is $130, and the investor leaves, having acquired the volume of the asset he needs. What will happen next? Will the new price become equilibrium and meet the expectations of buyers and sellers? Will buyers who were in no hurry to buy an asset for $100 a few minutes ago buy it for $130? Of course, they will not do it. As the price rises, all the buyers who wanted to try to capitalize on the quick momentum have already made purchases, and many will sustain losses because the price of the asset will now drop quickly. Now all sellers seem instantly invigorated, and no wonder. Just 5 minutes ago they dreamed of selling an asset for $110 or $115, and now they see a market price of $130. On the contrary, buyers will slow down. There will be a sharp price reversal towards its previous equilibrium value, which suited both sellers and buyers. Quite possibly, the price will not return to the level of $100, but a significant correction will take place. It is on corrections like these that occur after price impulses that I earn money, seeing a fast and powerful momentum in the price, and it does not matter whether it is an increase in the value of an asset or a decrease, I swing into action. I just make a trade in the direction of momentum correction and make money on this move. In this financial market, it does not matter whether the market correction is strong or weak. The amount of income from the transaction does not depend on how many points the price passes from the moment the transaction is concluded to the moment it is closed. The main thing is that the price should move in the direction we need by any number of points, even if only by 1 point. This will be enough for us to make good money. Let's return to the causes of price impulses. An announcement of an important economic event is the second reason for a price impulse on the chart. New economic data can change the market currency exchange rates. We cannot foresee the entry of a large investor into the market, but we can prepare and see how the market will react to the release of economic information. Approximately the same principle works here as in the situation with the appearance of a large investor on the market. If the economic data is positive, the value of the asset begins to rise, with new speculators joining the buyers every second. As a result, the price sustained its equilibrium until the moment the news was released, and then it spikes, for example, from the level of $100 per unit to $130 per unit. Please note a key noteworthy feature. Suppose that the economic data turned out to be positive and the conditional equilibrium price of the goods should now be not $100 per asset, but $115. But during the news-induced impulse, the market price overcomes $115 and reaches $130. That is, the cost of the goods is now excessively overpriced, the asset is overvalued. Why did it happen? Firstly, because no one can announce that under the new conditions an adequate price is about $115. Secondly, because the first reaction of the market is to buy an asset as soon as possible before it rises even more. Nobody knows whether it is expensive to buy at $115 or $120, we only know that after the release of positive news, the cost of this product should grow. Therefore, due to the misunderstanding of the current value of this asset, traders drive the price of the goods to inadequate values because of their hasty purchases. At some point, no one else feels inclined to buy the product that has risen in price in a couple of minutes, for example, by 20 or 30%, but there are many sellers who yearn for selling their stocks at a new attractive price. As a result, the market abruptly changes its direction and the price plunges, pushed by a large number of sellers, some of whom bought this product for $105 a couple of minutes ago. This is the correction after the price impulse that you can capitalize on. How should you act to make money on economic news? First, we select important economic events of the day and set ourselves reminders 5 minutes before their announcements in order to have time to prepare. 5 minutes before the news release, you can launch the trading platform and open the chart of the selected currency pair. You can learn how to select currency pairs for the news of certain countries in the lesson on the news trading strategy in my free course. There I describe in detail how to choose currency pairs for news. Please find the link to this free course below, in the description of this video. Until the news is announced, we do nothing, no matter what happens on the price chart. By the way, this is an important advantage of this strategy. We do not have to guess in which direction the market price will move after the release of the news. The time frame of the price chart of the currency pair we have chosen should be equal to 1 minute, and the expiration should be set to 2 minutes. In the first minute after the announcement of the important economic event, we do nothing, but only observe the situation. All actions on the news strategy are performed only when the 1-minute candlestick closes on the chart. As I noted earlier, during the first minute after the release of the news, we look at the price movement. If we do not see strong price momentum on the screen by the end of 1 minute, we do nothing and see what happens over the next minute. If an impulse appears, which may look like one candle with a long body or 2 or 3 candles in a row with relatively long bodies, then we enter the market. The trade is made using a 2-minute time frame in the opposite direction of the impulse. That is, if we see a fast downward price impulse, then at the end of the 1-minute candle, we buy a call option. Further events can unfold in different ways, so let's consider possible options. If the market price has increased by any number of points in 2 minutes, the transaction will automatically close with a profit. After that, you can quit the trading platform and wait for the release of the next news. If the market response was extreme, then you can enter the market not once, but 2 or even 3 times with just one piece of news, but this does not happen very often. If you are just exploring the strategy, I recommend limiting yourself to 1 entry into the market and, upon successful closing of the transaction, calmly wait for the next news. If the trade closed with a loss, then apply the money management mechanism, which I described in detail in lesson 2 of my free course. This is a limited martingale trading system, which uses up to 6 transactions, and these contracts have different expiration time, depending on how the market situation develops. This is not the classic martingale system, when a new trade simply opens with the same expiration time after a previous loss. I have a separate video about working with the expiration time within a series of deals. The link to it is now in the top right corner if you watch the video on YouTube. Be sure to check it out. This mechanism for changing the expiration time has been developed, tried and tested for several years. In addition, the ratios in my money management model are based on statistics. The second and third trades have enhanced odds, while the next 3 trades have reduced odds. More information is available in Lesson 2 of the course devoted to the new strategy. So, if the first trade for $20 is closed with a loss, a new contract for $60 is immediately purchased, in the same direction as the previous one. In our example, transactions will be made to increase the value of the asset, due to a downward impulse wave. For 2 minutes, we again simply observe what is happening on the chart. If in the end the transaction closes with a profit for us, then this income will be enough to cover the costs of the previous transaction and we will earn money. If the second trade closes with a loss, that is, the momentum still continues to develop, then we will immediately make a trade for $180 in the 2-minute time frame in the same direction, that is, up. Sometimes it happens that the reaction of the market is so extreme, it comes down to the 4th or 5th transaction. This rarely happens, but if we are faced with a similar situation, then the expiration time of the 4th trade is to be changed according to my system. Let me remind you that this model of changing the expiration will be discussed in detail in Lesson 5 of the course and on a special video tutorial. So, the $60 trade closes with a profit, I gain $52.20. From this amount, you need to subtract the cost of the first transaction, so the net income will be $32.20. Another scenario unfolds when the market does not respond at all or hardly reacts when an important economic event is announced. In 3 to 5 minutes, there is still no momentum on the price chart. Either new 1-minute candles are the same size as before the news release, or their bodies are slightly extended, but still do not show the impulse necessary to execute a trade according to the new strategy. An impulse is a strong move in the price, and candles on the chart are just one of the options for displaying price movement in a form that we find convenient. If you have any doubts about the size of the candles when an impulse appears, it is better to abstain from the entry and look forward to the next news. If within 3 to 5 minutes after the release of the news on the price chart you do not see any adequate impulse for entering the market, then don't do anything. There is no point in continuing to monitor the situation on the chart. On my YouTube channel, I will continue to publish recordings of my trading with an analysis of real market situations. There you can find videos of my news trading to learn this trading strategy better and faster. Don't forget to subscribe to this channel. I'd be also grateful if you like this video. Thanks. If you have any questions about the news strategy, please post them in the comments under the video. I will do my best to reply to everyone. In the caption to this video, I will leave a link to my course on trading for beginners. It is completely free of charge and there are no paid lessons after it. If you haven't started this course yet, I highly recommend signing up. The lessons are sent automatically every 24 hours. I wish you successful trades. See you.